G'day guys, and welcome back to another episode of the Aussie Investing Machine. Thank you so much for joining me. In this episode, we'll take a look at the company Inghams. Now, many of you may have heard of Inghams. They are a company that focuses on the production and sale of chicken and turkey products in Australia and overseas. They are a vertically integrated company, and some of the people they supply chicken to include companies like Coles, McDonald's, KFC, HelloFresh, and many others. There is no surprise that interest in a company like Inghams is peaking at the moment, given the current economic circumstances. Of course, these circumstances are where rising interest rates are front of mind. Inghams is a traditional bricks and mortar style company with consistent profit margins, a lot of physical assets, and quite a wide moat around their company in terms of competitiveness. So what has driven the share price of Inghams up over 8% over the last week? Well, this was mainly due to some updated profit guidance that the company gave. The profit guidance was given on the 28th of May. Inghams are forecasting their EBITDA between 438 mil to 448 mil. Their reported EBITDA from financial year 20 was 387 million. So even at the low end of their recent guidance, this represents a 13% increase year on year. In my opinion, this is a remarkable result for a company that I think is generally known as a slow grower. It's also important to consider this forecast in relation to their FY19 EBITDA, as this represents an 80% increase on the numbers we saw in FY19. So let's take a quick look at some of the things I like about Inghams and then some of the things that I don't. The biggest strength of Inghams, in my opinion, is their vertical integration. What this means is that they have almost total control over their entire supply chain. This means they are in control at the very start, with the breeding of the birds all the way through to processing and even as far as distribution. The company claims that this vertical integration enables us to create value and realize efficiencies across a highly complex and large-scale supply chain. In turn, this complex, wholly owned supply chain creates a very high barrier for entry of competitors into Inghams' market. It would be incredibly difficult to influence Inghams' market share as a new competitor in the space. There would be a huge amount of capital expenditure required in order to gain control over an entire supply chain like Inghams has. It is worth noting, however, that Inghams does not have a current monopoly on the market. They do have one major competitor. This competitor is Bayada Poultry. Together, Inghams and Bayada control over 70% of the Australian poultry market, which is a significant amount. So what about some of the negatives for Inghams, in my opinion? Well, for starters, you can't expect rapid growth from a company like Inghams. They're just far too big and complex. Their potential for future growth and scalability is also limited because, one, they have a really high percentage of market share already, and expansions in their supply chain would be CapEx intensive. These facts, I'd argue, are reflected in the company's share price over the past 5 years, which in my opinion is far from impressive. You would think, at least from a slow grower like Inghams, you could expect a steady increasing dividend like we see from some of the best value stocks on the market. Well, that's also not the case for Inghams. Inghams' dividend distributions have been a little bit all over the place. There's been no real consistency in their dividend payouts. Their payout ratio is quite low. It's in the 60% range, but still we're not seeing any consistency in their results. With all of this in mind, I see Ingham as quite a tough sell to potential investors. Yes, if the share price could reach its previous all-time high of $4, you could be looking at around a 30% increase in terms of capital gains. Whilst this looks like it could be on track to happen with their recent profit guidance, it's unclear if this profit increase that we've been seeing over the past couple of years will be sustained. Anyway, I'd like to know what you think about Inghams as a company. Perhaps you're an investor, perhaps you're just waiting on the sidelines. I'd love to know. Leave me a comment below and tell me what you think. Well, that's all from me for now. If you learned something from this video or you're enjoying the content from this channel, please feel free to subscribe and make sure to give the video a like. It really helps out the channel. Until next time, I'll see you in the next video. Cheers.